Hey, hi everyone. Welcome to another video. And today we are going to discuss about SL hunting. And yeah, so this is going to be an interesting video. SL hunting stands for stop loss hunting, and we will discuss about this SL hunting in Indian options markets and also the stock markets, swing and intraday trading. Okay, and how institutions do this. That's what we are going to discuss today. So, what is SL, SL hunting? So SL hunting is a behavior that is exhibited in the market, and generally this behavior is attributed to big players. There's no confirmed evidence that big players only do this, but it's attributed to them because they have that uh, volumes as well as the deeper pockets to do a liquidity sweep. That's why it is attributed to them. But there is no confirmed evidence that that is done by them only. So stop loss hunting is like hunting, okay? Like a tiger hunting a deer, okay? So tiger is powerful, it's very fast, and it's made for hunting. And deer is fast, it's also fast, but it's not made for hunting, okay? It's made to be hunted. So that is the behavior. So this is one of the behavior that happens in the market, and market exhibits this behavior uh, continuously and in a pattern. Okay. Other than this SL hunting, the other behavior that the market exhibits is speculation and yeah, volatility when there is imbalance between buyers and traders, sellers basically, and also indecision. Whenever indecision is there or when low volumes are there, market exhibits another behavior called theta decay. Okay, so theta decay is also a behavior of the market. So yeah, let's come to our topic, which is SL hunting. So SL hunting is basically, the word hunting is because it's similar to hunting. So like a tiger hunting a deer. uh, so stop loss hunting, so it is called as stop loss hunting, or liquidity sweep or liquidity hunting is called stop loss SL hunting. This occurs when, this is again attributed to big players. There's no confirmed evidence that big players do this, so but yeah, this occurs when big players like institutions, hedge funds, proprietary desks intentionally push prices towards levels where retailers stops are placed. Okay, and where do the retailers place their stops? Generally, below recent lows or above highs, and based on certain patterns, like when trend line breaks, they'll put a stop loss below that trend line break. When range breaks, they'll put a stop loss below a range breaking. And yeah, similarly, the basic retailers using patterns or support resistance patterns they use range breakout patterns, they use trend line patterns, they use price action. So yeah, all of those apart from previous day high lows could be used by this big players to intentionally push these prices towards that level so that the liquidity sweep may happen or SL hunting may happen. And once this stop triggers market orders basically, because a stop loss is a market order. Okay, so once this stops prices, going towards that the retailer stops, and these stop loss orders are triggered, which are market orders, it unleashes volatility. Okay, and this volatility creates liquidity for these big players, and then the price reverses, benefiting the hunters. Okay, so let's use hunters, not big players. Let's use hunters and for our terminology. Okay, so how institutions implement SL hunting? So they, or hunters, you implement SL hunting. One is, you can map retail clusters. So where you can find probability regions where retailers could put their stop loss levels, stop loss market orders. Like You could analyze the high interest levels like previous days high low psychological levels, range breakout levels, trend line breakout levels, or certain pattern breakout levels. Here you could analyze those high interest levels of retailers, where they put their stop losses. And yeah, commonly studied chart patterns are bull bear flags to locate stop loss clusters. Yeah. So mapping retail clusters, other than that, triggering with heavy orders. So they place large market or iceberg orders to breach these levels, triggering retail stops and accelerating the price move. Okay. And when stop loss orders are triggered, the market orders are triggered, then the price moves in the opposite direction. Okay. And then turning the tide basically. So mapping those retail clusters where the stop losses could be there, then triggering them with heavy orders like large market or iceberg orders, and then turning the tide. So basically accelerating the price move and fueling volatility. Institutions often reverse direction rapidly, entering at improved prices after weaker hands of exited. Okay. So where the stops have triggered, there that's where the institutions or the hunters will enter, and that basically the market will move in the opposite direction. And the profit extraction, once the market moves in the opposite direction and the liquidity is captured, we will basically have a favorable entry exit fills and profits extracted from this sell hunting strategy. So intraday versus swing execution. So intraday sell hunting, this happens a lot. Sell hunting happens a lot in intraday, uh, and swing compared to positional trading. Intraday it happens very frequently. So intraday sell hunting timeline is minutes to hours. Targets are days high, low, pre-open levels, round numbers. These are targets. Example on bank nifty: a spike below the morning low hits retail stops, then reverses as institutions buy into the induced dip. Okay. So that's an example. Swing SL hunting, several days. The timeline is weekly support resistance levels are the targets, and chart breakout zones are the targets. As, for example, a stock repeatedly tests a 200-day moving average and breaches it just to sweep the stops, and then reverses decisively upward. Swing traders often cite this as a fake out or a pattern failure. Okay. How traders can detect and protect themselves from SL hunting by being wary around the obvious levels. So you anticipate move around key zones like previous day high, low, round numbers, Fibonacci levels, moving averages, trend lines, patterns, ranges, and all that. You be obvious there, and don't put your stop loss exactly where everyone is going to put. Either you put a little bit below, or don't put at all. Okay, trade some strategies instead, which where the risk reward is known. Or if you put it at a certain distance where the clusters won't be there. So be wary about those obvious levels, and try to place the levels sell below those levels, or trade with strategies. Use wider and on mental stops. So set stops beyond typical stop cluster zones. So 1 into 1.5 to 80 are away you can put, or use mental stops to avoid visible order exposure. Okay, or don't put a stop loss and just put a mental. In your mind, you put a stop loss, and when that stop loss hits, you exit from the position. Put a market order and exit that position. Monitor volume patterns. Sudden big volume knockdowns on low liquidity often signal institutional activity rather than fundamental selling. Okay, and look for false break setups, reversal candlesticks, or follow through in the opposite direction after sweep may signal a bounce or entry opportunity. Okay, so once these stops are triggered, if there is an opposite candle formed there, then that may indicate a reversal and entry opportunity. Trading the hunt you could do, so you could just go along with these hunters, and you could also do the hunting. Basically use whenever a liquidity sweep has happened, if you are able to identify it, then you take the opposite trade and use these reversal strategies. So short on a sweep below support, and so once support is broken, you short it. But once the but once the liquidity sweep has happened, then you exit that position and switch to a long position, because automatically it will go up, because the liquidity sweep has happened or SL hunting has happened. Then switch to a long position, so you profit from the hunting as well as the reverse thing also. So short it when the support is broken, because the hunter is trying to catch the hunter. You make money from it, then take the reverse trade when the hunter is the institutions are taking the opposite trade and moving the market in the other direction. Then switch to a long one, support holds or bullish candle forms. Okay, this is called as trading the hunt. Okay, so you will once the support is broken, you'll short it, and once liquidity sweep has happened, then you will take a long position on confirmation of a bullish candle, and you will make profit in both the directions. It's easier said than done, but yeah, you could do that. Case examples: Bank Nifty intraday. So price dips below opening range low, stops are triggered. Big players buy the dip, and Bank Nifty rallies back to resistance. Some traders take long setups on the bounce. Okay. Mid cap swing example: a stock breaks its 200 moving average on small volume drop, sweeping the stop losses below it, then snaps back with buying volume the next day. Traders label it as a failed breakdown and long it. Summary: SL hunting is real. It happens in especially in low liquidity environments like intraday segments and small and mid caps. Institutions leverage it to clear retail positions and gain liquidity and execute efficiently. Small traders can either avoid vulnerable stop zones or trade the hunt using structured scalping. It will help you. You quickly enter and exit before the hunt happens. Okay, or else you will be hunted. Okay, false break setups and buffered placements also you could use to avoid this SL hunting. Okay, and this is not 100% sure that this happens all the time. So this is also probability based thing only. It doesn't happen 100%. SL hunting is not the only market behavior. Market behavior has other things to it, like speculation and also imbalance between buyers and sellers, volatility, external factors, macro factors also influence the market. And again, the difference in opinions between big players also influences the markets. This is not like this is what will happen in the market, but this is also a phenomenon that happens in the market, and it is a pattern that has a it's a high probability pattern basically. Uh, but again, it's a probability. It's not like confirmed thing that happens in the market. Yeah, some traders use this to trade, and yeah, and I think it's around 55 to 60% probability would be there for this type of strategies. And yeah, but it will give you a good if the risk reward is good, you can make money of 50 to 60% profit, probability of profit also. So that's it for today, guys. So this is the SL hunting strategy, and how it happens, who does it, how to avoid it. Okay, so that's it for today. Thanks everyone for joining the call. Have a nice day. Bye.